All right, welcome everybody to the Bookmap Academy meeting. So sorry to miss you last Thursday, but we're here today, and the goal, or what this program is all about, if you're new, is to um, well, if you're a part of the program, this is for you. And it's a coaching mentoring webinar or event here and program. So you create content, you mark up your trades, your charts, we review them, give you feedback, and then for specific ones, we invite you up to the stage here, open up the mic, listen to your process, and then give feedback. All right, so a few news items, and then a bit about the program as well, and then we'll dive right into it. So you might want to partake in our Bookmap desk competition. We do this every now and then. Take a screen, or not a screenshot, take a photo of your workstation and upload it to X, LinkedIn, or Instagram with the hashtag Bookmap desk. And you're good to go. It'll load right up, and we've got some two prizes here, so it's great. We've got $1,000 for first prize and 1 year of Bookmap Global Plus. It will also include one exchange for data, and then we'll also have a professional photographer come and take a photo of you at your desk. And then there's a runner-up for $500 plus 1 year of Bookmap Global Plus. So you can use your phone, take a screenshot here with the QR code, and go and enter. All right, so our Bookmap Academy. Let me just kind of I'll try to briefly describe it here and not go into too many details about it. Just go to bookmap.com, click on the More button here, and then under Community Bookmap Academy here, you can sign up for this. It's all free. You will need to register at bookmap.com, but that's it. You can even have the free version in here and still get feedback. You'll probably end up getting the Global or Global Plus version so that you can get the live markets and get more feedback that's a little more apt to the way you're trading. Anyway, go read through the process in here. We're willing to help you out as you get feedback and become a better trader through your journaling. And you make quality feedback. We'll give you Bookmap Global Plus for free here. Now, it's a process. You will be invited to the Bookmap Junior Academy, and then you can even get add-ons for free as well if you double your quota. There's a quota that has to be met of qualitative and quantitative. And we're only talking like one piece of content per day. That's it. You can become a Bookmap coach, and you can get data for free. You can become a Bookmap streamer as well. So anyway, if you want to get started, here's the form. Fill it out, and then come on into the Bookmap Discord community, and you're good to go. All right, this is the process we go through here for journaling. Impetus. Number one, what's moving the market? We were just talking earlier about some of the fundamentals out there, and some of the instruments involved in those fundamentals as well. And number two, key levels, okay, on the higher time frames. Then develop strategies and scenarios around those key levels on your higher time frames. And then number four, this is what we spend most of the time in the academy on here, is your setup. You're selecting the proper setup for the day. You're going through a checklist. You're grading it. You're determining your risk and sizing. And you're looking at the order flow to give you that edge for execution. That's it. Okay. So, and that's what we're here for, to listen to you. Now, Bruce's pilot program. This is a subset of that Bookmap Academy. And the way or why we developed this was that a lot of times we see people come to the Bookmap Academy, or just over the years, it was driving me crazy to see all of these traders, very, very sharp, very smart, and they can understand setups, they can understand all sorts of things very, very quickly. However, there was a huge gap. They didn't have an edge. They would be trading a setup and just taking shots in the dark, basically. There was no process. There was no definition to building that edge. And that's what this program is all about. So we have a structured process, and is measurable, is testable. You will be building out your experience and your edge in data. And it's a very fast method. It's not like going into your candlestick chart like we always did in the past, and this is what kept people from doing it, was measuring, oh, the candle went this far, it went that far, went this much against me, etc. Well, we'll provide the files for you. You will just trade them in replay mode, and you'll capture the data in the trading journal. So you'll have the data, you'll have the experience. All right. This is the fastest method I've ever seen. So if you're interested in that, go again back to bookmap.com, click on the More button, and then right under that Academy, you see Bruce's pilot program here. Now, you will need to have Bookmap Global Plus for this. We actually need to change that here. It says Global. It's Global Plus only. That's just a recent thing. That's it. All right. So let's go through some disclosures, and then we'll get started here. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in and let's see. David, you've got...
I've got John TD.
Yeah, you got John TD. Okay, yeah, there we go. Yeah. And is TD in here?
I don't see him. I see John, my wingman John. I see wing girl Laura as well, but I don't see.
Okay, all right. Well, then let's jump into John.
Hello there.
Hey, how are you?
Fine, sir. How are you?
Excellent, excellent. So welcome, and sorry guys about last week. Yeah, David, take it away here.
Yeah, sure. Well, good morning, evening, afternoon, my usual thing for down there. I've got always a pleasure looking at John's charts. As I've probably said before, John, rudely, politely, you and I trade fairly similar, so sometimes I'm sort of like taking a mirror view on it. Nice to see you trading some NQ here, John. I haven't seen you on the NQ for a little while. I mean, Bruce, these charts are crystal. They really are crystal clear. They're beautiful charts. We can all learn from these in terms of great annotation, checklisting, risk reward. We know the time of day, really well marked up. These could be published. These could be wily trading charts, John. They really could be. They are absolutely fantastic.
Thank you.
The trade John's taken here, which I will throw you the mic in a minute, it takes me back, Bruce, to when I'll say you and I, well, certainly when I joined you and we were looking at Scott's trades, and he probably still has all these various names, Dumb and Dumber. And this one here, John's just snagged perfectly. And this is a real trade chart, guys. You can see that this is real trading. Price is scooting up. It's going through passive liquidity. It's ripping stops. And John there, he's locked, he's loaded, and he's just waiting to see when it's going to fade back down. And you, again, Bruce, you'll recall back from my Twitter post 1,000 years ago. I would describe these as like a champagne cork. It's come out the bottle. Yeah. It's going up, but we all know gravity's going to kick in and it's going to start fading back down. And as soon as it does, John's all over that, and we can see very clearly what he's doing with his take profit. We can see exactly where his stop is. It's really good. He's had a key lens here on the option levels as he's marked out on the chart. So he's sensing there's a possible bit of action there, a bit of zone of interest, a bit of Zoe stuff going on. We've got the additional liquidity coming in later on. You'll see to the right of number 6 there, Bruce. 72 comes in. So you've immediately started thinking, okay, this is where we're going. The only question I'm going to leave you with here, John, when I throw over is, are you doing some, this is getting towards the cash close, isn't it? How much of Trace and those other tools you're using? What about the scaling? But over to you, John, please.
Yeah, like you said, this was near the close, and this was an options This was an options play. So you can see
Okay. Okay.
we went past the call options exactly. And I thought
Yeah.
that was overextended, especially with the
Big time.
behavior, running stops. And they were sweeps too. So they were
Mm,
single entities, big boys pushing this thing up.
yeah.
And so I just waited for the reversal. I love the delta column on the right, and that just gives me an
Yeah.
idea of who's in control. And I sell out the bottom of that. Basically, I take one contract off with a little bit of profit, and then I
Nice.
manage my exposure on the second one. And then it came down so hard and so fast. I mean, I couldn't hardly get my move my target fast enough to get out of the way. But what I saw in terms of other tools, David,
Yeah.
I have an Excel dashboard that I've created that
Nice.
is basically fueled by a connection to Thinkorswim, so I get real
Okay.
time
Okay.
data, and I
Lovely.
I monitor option activity on the Qs, the SPY, and then the FANG stocks. And what that showed me
You are.
was that a bunch of puts came into the market and they were buying puts like crazy.
Ooh,
And somebody knew
nice.
something because when
Yeah.
Globex opened, they just tanked it from there. So I don't know
Mm.
whether it was the White House buying puts, but they were all over it. And
Yeah.
so
Likely.
I just came down. I like to marry the option flow with the order
Yes.
flow, and this is an example of that.
Perfect.
So that
I
was really the catalyst, thinking, oh
lovely.
boy, if they jump on this to hedge,
Yeah.
this is going to come down flying. I thought I could at least get down to the call gamma at
Mm-hmm.
46, and
Okay.
I would have been
Okay.
pleased with that. And then it just
Yeah.
kept coming. So I thought, well, and the liquidity was starting to get pulled on the way down. So I
You
just
see
wrote
it?
it.
It's good. Yeah. When these happen myself, I do try and glance at my news feed, but I'm also cognizant, John, as you will be, the news feed can lag
Yeah,
just to
yeah,
sort of see if there is the scoot up is actually some positive news, but it's
yeah.
it's it's a glance if nothing
And
else.
then at the target at 910, a little bit of liquidity came in the market. I had made a bunch of money. So I
Oh,
thought,
big time,
take it.
big league.
Don't be,
Yeah. See.
yeah.
No, it's
And,
beautiful,
and
beautiful
so
timing.
like anywhere in there would have been just beautiful. My target was basically gamma.
Hmm.
But I thought I saw that liquidity come in. I said, don't be a fool. Take it. It's a bunch
Yeah,
of money,
yeah.
especially
I've
with the full contract.
big time. I mean, I'm sure you've seen my posts this week
Hmm.
and last. I, the little tweaks I think that Brent's been doing to Hero is really, for certainly my lens, has really sharpened up. There's been some lovely moves, Bruce, on options. Can be a couple of minutes ahead. We had that this morning, or let's say my morning,
Hmm.
John, where a real big flip up of 300-400 million within ETH.
Hmm.
Bruce went north on the, I think that was on the puts,
Hmm.
and he thought, yeah, the price is going to come off, and it was just coming off the low of this. Yeah, it was late morning, my morning, so
Hmm.
pre-market for
Hmm.
you. Just yeah, great heads up, really good
Hmm.
intel, really good
Hmm.
intel.
Hmm. It's
Good
such a huge market that is the option
yeah,
markets. It's undeniable that you really need to stay aware of what the hedging community has to do, and that's the key word. They have to cover themselves. If
yeah,
they pause, boy oh boy, they could really get. They're losing their jobs.
yeah,
Period.
yeah.
So it's not a speculative move on their part. It's covering their backsides.
That's it. Yeah, if I try and give a bit of scale to everyone here, and having my scales wrong, John, Bruce, and others, but where I mentioned 500-600 million swing, where the total number for the day on maybe 2-3 billion, if
Hmm.
that's a material move, and it's a material move because it's extended traded hours, it's ETH, it's London
Hmm.
hours.
Hmm.
So when I see that happening, as
Yes.
you're rightly saying, John, I know they're going to have to step in. I'll
Yeah.
try and find a screenshot and stick it into the chat at some stage.
Hmm.
But Bruce, should we throw the ball back to Bruce for some Monday morning stuff, please,
Hmm.
David?
Yeah, yeah, Monday morning quarterback in here. So, um, well, like first off, you mentioned just to kind of try to go sequential here. You'd
Hmm.
mentioned about John's chart, about your charts, John, just the intention and the detail in the markups.
Hmm.
And you are very consistent with this, and it's been this way for a long, long time. And it's been just excellent. It's like David said. I mean, these you can publish in a book, and it's pretty clear.
Hmm.
So um, people like in the academy and in the pilot program, uh, you can see the consistency here in the quality of the markups. And I would just like to. I know we've mentioned this before, John, but like with this kind of detail and this kind of intent, when you go back and review and you spend time with this, I can only imagine you're learning all sorts of details and seeing like, aha, oh, look at that. That's interesting. I didn't see that before.
Mhm.
And uh, if you have any sort of, I'm wondering if you have any sort of comments on that about like spending some time with this is something that really is helpful.
Mhm. Mhm. Always, absolutely, and even when I'm looking at it right now, you see on the way down, those pivot lows were accompanied by sweeps. I mean, they were really pushing this thing hard. And I saw it in real time, and that was one reason I was getting my target out of the way. Exactly. And that's where Bookmap really shines, to be able to identify that and say, hey, there's some big players in here, and they're pushing. I want to stay with this. And there was no real clear liquidity in the way until we got down there at 910. But like I said, you see the same thing all the time, and more of it's a confirmation. Yes, this is what I want to do. When I see it, this is bread and butter. I'm doing this.
Yeah.
But early on, it's an education, right? You're developing your methodology, but yeah, you're always looking to learn something about what you've done. But on this one, I can look at it and say, yes, I do the same thing tomorrow, which is
Yeah.
important.
I mean, there's all sorts of beautiful details in here. And I do have some questions on the entry in this kind of move higher.
Yeah.
But what I really like here, though, is also just we've talked about in the academy about context a lot, and here it
Mhm.
is. So you guys can see, he's looking at these sweeps. He's
Yeah.
looking at bigger picture,
Yeah.
gamma levels here
Mhm.
on options. He's
Mhm.
looking at very, very high liquidity getting filled on the way up,
Mhm.
and seeing that this is a huge sweep. I mean, look at the size of this volume down here,
Yeah.
and it just dwarfs everything before it. It's
Mhm.
massive.
Mhm.
So you know, putting all those pieces together in context, you see an opportunity, and you have seen enough, and you know your way of trading that this is an opportunity worth putting risk on, and it worked out really well for you. So I just think it's so important to one thing kind of leads to another, from the intent of marking up, understanding this context. There's a lot of context going on in here,
Yeah.
and then some of these things like the sweeps indicator,
Mhm.
along with options and larger player activity near the close, or it's 3:50, so 10 minutes before the close. I
10
mean,
minutes. Yeah.
this is uh, well, I mean, you see enough things like this, and you know how to react. It's like, I mean, I hate to say it like this, but it's easy money in essence.
Yeah, it is. It took a while though. I mean, that's 40 handles in a minute.
Yeah,
You,
yeah.
you
I
got
mean,
to
this
have
is like
a
here's
pair of
30.
cojones to get, to fade that, which is what I
You do.
did. But I've
Yeah,
watched this for years.
yeah,
Uh, that
The
that
cork's going to come down.
I'm pretty comfortable with buying in the strength, but that's ridiculous. I mean, that'll tear your head off. But
right.
again, that's where Bookmap comes in, and I see that reversal coming in. It's highlighted on the delta column, and I'm real quick on the trigger. If it starts to go against me, I'm out. I'm gone in a
Yeah,
heartbeat.
yeah, yeah,
And that's just something you come from practice, and that's where market replay is important because I've played this thing more than 1,000 times over and over again.
yeah,
Get my timing right. get my hotkeys ready, all that kind of stuff.
Right.
Yeah.
Right. Yeah. So anyway, after seeing it so many times, like you know what you're looking for, and yeah, of course, there's always risk. And this thing, it is amazing that these are 30-second intervals in here between each kind of vertical dotted line.
Yeah.
And so we're really talking since you took that trade, a minute and a half passed,
Yeah.
and that's it.
I wish they all lasted 90 seconds. Whew. Yeah.
Yeah,
Yeah.
yeah, beautiful. So a few things though, like okay, so talk about like so this is your key gamma level here though, right?
Yes. Yeah.
So why above here? And I mean I know some of your rationale here, but I'd like to hear more about like what you thought about this kind of move here in context above the gamma level, and then
Yeah.
back to the previous gamma level down here.
Right. Yeah. Down there at the gamma level below at 905, that's where they were buying puts collectively. Above, they were calls up at 48, and there are zero DTE calls. And so I was a bit surprised with this push to the upside. I thought by the close, they're going to want to get those calls at 48 to expire. And that's based on the Qs, it's based on the spies. I do a composite calculation and make an estimate as to where these things are. And that's what that represents. And so the logic is that they're going to try to push the value of they're going to try to push prices below those calls, because if they do by 1 penny, they're worthless. If not, they have to ante up the intrinsic value. So that was the idea behind that. And you get a 40 handle move in a minute, fast never lasts, and I'm looking for the reversal. But that's the logic behind it in terms of the options. I thought that they would want to expire those call options worthless, which they did, and they were also buying just a boatload of puts going into Globex. So there were two forces at work there.
Yeah.
You follow me?
Yeah. No,
Yeah.
I get it. And it's at
Yeah.
the close too, and this kind of stuff
It's at the close and
happens.
they're about to expire, and
Yeah.
exactly. And whoever owns those calls up there, they're going to want to take it or they're going to lose it
Yeah.
because they're about to expire in 10 minutes. So and Hero reveals that. Like I said, I have it on a table so I can look at everything rather than 15 Hero charts. I have it on a dashboard. And it's not quite as clearly as sophisticated as what Brent is doing, but it does give me an idea of where the volume is coming in, and
Yeah.
and uh, and I can see the volume coming in on the puts.
So I'm a little confused on the trade management here. So did you get a chance to take some off, or did you just
I
hold the whole
did.
thing?
Yeah, no, that I took some off. It's barely showing it, but at number 5, that was my first target coming into liquidity at 55.
In here.
So getting short at 67.50, got 12 handles, 12 and a half handles. That covers my risk exactly.
Okay.
And then I brought the other one down.
Okay. Okay. Yeah.
And I had that on an ATM, so I have to quickly move it. But the idea is just to get something in there, and then I'll move it down. Usually I allocate a little bit more, but I just didn't expect this kind of move. I was just hoping to come down to 46 or so.
Yeah. Yeah. Um, yeah, just right back down to your gamma level.
Yeah, something like that. But then when I saw the puts being bought, I said, okay. And then I saw them, selling sweeps coming down. Then I thought, okay, we're going to go.
Yeah. Beautiful context. Putting
Yeah.
all those pieces together,
Hmm.
and there's a lot, and so simply and kind of elegantly done. Just like okay, this goes with that, that goes with this. I'm looking for this on this huge sweep at the close, putting that into context of the options, and
Hmm.
then starting to see these sweeps on the way down
Yep.
and
Yep.
target your high liquidity.
Yep. Yep. That's right. Yeah. Thanks.
All right. Well, I kind of beat that one to death. DNT
Yeah.
is here.
Enough of him.
Yeah. Let me
That's your instruments.
let me invite DNT up.
Enough,
So trading is life. I don't know if he is
enough of
in
that guy.
here, or anyone else has any other comments.
In the chat, Bruce, I've thrown in a couple of
Yeah.
the option charts from today.
Okay.
May not be the ones I was banging on about, but these are two, and these are pre-market. So this one here, you can see John will be able to explain the full complex. This is one of your favorites, I think, isn't it, John? Within the S&P 500, I often play the SPY one, but you can see the time there. But look at the orange line here, Bruce.
Right
And
here.
that's the core line. Yeah, and that is going vertical, and it went a lot more vertical after that. And that for me was a clear, easy, low risk relative trade to go long, and it did go long quite a bit after that. So
Nice.
it's just
Is this based on one day, David, or a shorter time frame? Here
I use much shorter time frame. I think this is a 10-minute one, John. I use
Okay.
much to I know to some people's frustration in the room.
And I just didn't. I haven't spent enough time with it doing that. But I
Yeah.
know Doug favors the S&P 500 versus the others,
Mhm.
like the Mag 7 and the
Yeah.
equities that Brent has. I like the SPY as well, and I do the QQQ for the Nasdaq. But yeah, that's clear. I mean, that's
It's
just
really
something
clear.
you really need to be paying attention to because that's a
Yeah, and
lot.
then that's it. So then on there, I'm flicking at my bookmap charts, I'm glancing at Ninja, I'm making sure that we are starting to see some buying. Where's the level? And in I go. And if you
Mhm.
can really get the first chart in, sorry, Bruce.
Okay. First
If you
chart.
first from the chat,
Oh,
from chat.
okay. Yeah, here.
That one, yeah. So again, this is today. Look at that one there. Look at that blue line there, John, going
Yeah,
down, and,
yeah,
and that is so far going down before the white line's the price action. Look
yes,
at that.
hmm
So I am then immediately looking for my short setups, and
yes,
look what happened to the white price line.
yep.
Just
Yep.
yeah,
That's when you turn
just,
to order flow and you follow
yeah.
that option flow down. That's a
That's it.
great 1-2 punch. Yes, sir.
It is, and what I often preach here, Bruce, to the newer guys in the Discord, is that if you just trade these, get your edge, Bruce. If you just trade these, not only are you paying for your spot gamma subs, you're putting bread on the table.
Yeah.
Because these, they are low risk.
Yeah, I mean, this is what you guys are doing is really great because you can see this in the kind of the bigger picture of what's happening with the
Yeah,
calls, the puts, and the price action.
yeah,
But you need the order flow
Yes.
you do.
to give you that confirmation of what's happening.
Yes.
And you're putting those two pieces together.
Right.
And
Right.
in this one, like, although it looks really simple the way John kind of put that all together, there's a lot going on here. Uh,
Yeah.
and especially at the close.
Yeah.
Anyway, but marking up your charts, doing it over and over again, playing in replay mode,
Mhm.
and you'll gain the experience, and you'll start to see these things unfold.
Yep.
And then pretty soon you're taking advantage of them.
Yep.
So really, really good stuff.
Yeah.
Let's see, one question. Oh, a couple of news items, I guess. Number one is, guys, I would love to put together some sort of options room here with order flow and bookmap. I know we have Doug, 3 times a week, but maybe there's some more we can do. Some of these things, like understanding the options flow here at the close, John has talked about multiple times. And he's waiting and watching for it, which is just, I love it. He's just like ready to pounce. He knows that they're holding a lot of options and they got to dump them. And at a certain point. So, things like this explain why there's such erratic price action in the order flow. So, anyway, we can touch more on it in the future, but that's one thing I wanted to mention. And another thing I want to mention here too, we will be opening soon, very soon, another chat room here in Discord. It'll be with Moby, and he is vibe coding with Bookmap and with a lot of different things. So he's kind of a coder, but he's not a professional coder. But this vibe coding stuff is very, very powerful. So this will open up another avenue as well for us, and put us on the in a new direction. So two new directions here that I think have tremendous value and potential here. So yeah. DNT, anything else you wanted to add?
Wow, those are huge announcements. Huge- That's pretty wild. Those are big expansions for Bookmap there for those rooms that you're talking about. That'll be really interesting.
Yeah, I mean the Moby, the
Yeah,
vibe
Moby's
coding room
great at
is that's
that.
going to happen for sure, and we'll see, you know. But the options thing, I'm kind of been floating for a long time, but it hasn't really kind of materialized. Anyway, I'd love to get more into it, and yeah. Anyway.
Yeah, Moby's helped me out with a program that he coded, I think last year or something like that, and I still use it to this day on my Sierra chart. So I'm really grateful to that guy. He's a genius with those things.
Yeah,
That's awesome to
yeah,
hear.
and quite the gentleman. He's been with Bookmap since like 2015. So anyway,
Old school.
yeah,
On this
yeah.
post, I didn't have much to say. I mean, there is something, and it's one of those things that like everybody here is probably watching this and seeing that rip and then shorting that rip. Well, I mean, it's just I it's nice. It's nice to see. It's cool to talk about. I just wanted to throw in, and it's obvious. I don't really even have to say it, but it's one of those things where you just practice it. You put it on repeat and you practice it, or you see it. I mean, John's been trading. I don't even know how many years, but I mean, after all the years you've been trading, you see this all the time at the mock, where you see this type of behavior, and you've seen it for so long. It at first it might seem like maybe newer people might be able to do this or something, but it's like I don't know. This is one of those things where I would recommend where it just if you're learning, this is one of those things to kind of stay away from.
It's muscle memory, isn't
um,
it? Yeah, this is like a
exactly.
bounce
This
Absolutely.
takes
bounce on
time.
the
Absolutely.
club.
This
Yeah.
takes a lot of time and
Yeah.
repetition, and it's like you keep practice or you keep seeing it like years over years, and
Yeah.
this is not months, and this is not even 1 year. This is a lot of years.
Yeah.
um this is not something that you could probably just learn. But with that repetition, let's say for instance if you're learning a setup or something like that, it might any type of setup, or learning how to learn a process. If you're learning a process, if you're learning options, if you're learning anything, it's a lot of time, it's a lot of investment. So you have to really kind of direct your attention to what you think you might want to learn, and what you think fits your trading style, what might work in with your personality and your risk management, et cetera, et cetera. But yeah, it's all these things look very foreign at first, and it might look wrong. But as you keep doing it, as you keep practicing it, it starts to and you verify it, and it checks out, and it's like an actual edge to you. Then you keep practicing it, and you keep looking at it, and it starts to make sense, and you keep doing it. It starts to flow, and then you can start integrating it into your daily routine, and then it actually becomes like a setup, and then you build it into your playbook. Like these this is a pretty advanced trade here. It's one of those things where we spend a lot of time talking about it, but it's one of those, it's so advanced. It's like, well, I don't know if I'd recommend other people do it, but
No.
it's really cool to look at.
No. It's not a recommendation. No.
Yeah.
Yeah, it's really nice though. It's really cool,
Yeah,
really clean.
I'm gonna argue with you on this, and pull out my bullet points here.
Yeah. Go
I
on, Chris.
I
I'm with
agree.
you.
I
Oh
agree
yeah,
that
go for
the complexity in here and putting all these pieces together can take years. Absolutely, it can. However, if you know that you want to look at exactly something like this, and you can come into something like the pilot program, which is extremely focused on like one setup, and this would be one setup. You can learn the components in a few weeks. You can start to mark up charts in another few weeks, and you can start to see this unfold. Now, it's extremely focused though, and I think you could learn it like pretty quickly. You have to understand what these things are, but like if you go through the longer process of like understanding like this could be trap volume up here, and you're looking at all sorts of other setups, etc., then I think it will take years. However, if you put this into a very specific context of at the close, the NQ, the volatility of it, the options levels, and then some order flow basics in here, and understand that, I don't see why this couldn't be put together in, I don't know, several weeks or a month or a couple months, and you're on your way.
Great clarification, Bruce. Thank you. That's exactly kind of where I was going with it. It just takes repetition, and that's what you're kind of pointing at. You can build it out yourself in this thing that's similar to like the pilot program, and just keep repeating it and doing it and building a course for yourself. That's a great clarification.
Yeah, I mean, it's just like
you're both right. You're both right.
We see. Thank you, David. That sums it up. Okay, none of us don't. We don't want to be wrong. No, but like I just think it's so. It's so important to focus, and if you are looking at, and you've mentioned it, DNT, with the new low volume pullback, or maybe it was Trading His Life, or maybe both of you guys, and you said like, well, I don't recommend that you dive into that if you've already started with the trend line break accumulation. Just focus on that, get really good at it, and know how to trade it, kind of like, the back of your hand, then move on to the next setup. And this way, like, I think it's going to be much, much faster. That's why we recommend the replay mode. Tomy is in here, and he was distracted early on with the live markets. He has since gone into just replay mode, and building experience. This is the fast road, and anyway, I think it can be done. So that's I just want to mention that point. I think it's a valid point.
Yeah, very, very cool. And what's interesting about this one is if you try to build this into a setup that you're trying to learn, this is a time of day setup. So you can just go back every day at this time of day and just kind of like observe the last previous hour and the last previous price action, and then just go into this like final 10 minutes or 30 minutes. And then, this would be a distinct time of day trade. Pretty interesting distinction.
Yeah. Good afternoon, everyone. Pardon my tardiness. I just want to interject and say I think both of you guys are right. If you're learning it on your own, it's going to take forever. It's going to be very time consuming. But if you have a strong community, like Bruce is saying, that can coach you and let you know what you're doing right and what you're doing wrong, that speeds up the learning curve tremendously. If you're doing it on your own, it's going to be time consuming. But if you have a strong community behind you that's backing you up and guiding you towards the right path, your learning curve is going to be accelerated tremendously.
Mm-hmm. Yeah, agreed. And that's one of the great things I think about the pilot program is you learning a process. And Bruce has mentioned this several times, and I always echo it too. You're building a process. And this process is building a professional trading. It's like you're learning the processes of a professional trader, and you take these processes and you build upon them. And it's not just one. It's like you build it into two, and you could take that process and you build it into another setup. And you can take that same process and build it into another setup, and then it kind of becomes like a flow.
Yeah, great point, DNT. All right, guys, I think we can move on from this one unless there's any last comments. John wants to move on from his own trade.
I want to move on. Yeah. I think I can speak for David on this. We don't want to mention a number of years doing this. It's starting to get embarrassing.
Lord, no, look at my photo. That says it all, doesn't it?
Just
Okay.
leave it as a lot.
Okay.
Yeah.
Oh,
he had the one for John, and he did the one for John. That was John's post. Yeah.
this is his as well. Okay. All right. Okay. So that's John, and let's see.
I don't have
You
TD with
have
us.
TD as well, but he's not here. Let's move on and open it up. We can go over TD maybe a little bit later, but those that show up, I want to try to get them up on the stage and have them explain some things. So let's see here. Do we got Daniel and Vinfra. Okay, here we go. All right, Moby covered you. A few setups here, so let's jump in and invite you up on the stage. Okay, so this was yesterday. Oh, I'm sorry. No, this was February 20th replay mode.
Yep.
Infra, I don't know if you are able to jump up on here. For those of you interested in coming on up, please get your mics all set up. Thank you, Jimmy. Yeah, we think so too, that this is a really good program here we've got. So happy you're from it.
Yeah, definitely.
Okay, well, Vinfra, I don't know. Did you get up here? Okay, he looks like he came. Oh, here he's back in. Let's try again. Hello. Yes, there you are.
Loud and clear. Hi, buddy.
Yeah, cool.
Let's see. Why don't you? Yes, we can hear you just fine.
Okay.
Great. Why don't you walk us through your trade setup here and what you were thinking, and then we'll take it further.
Yeah. Well, for me, it's a low volume pullback. I see the little the little impulse move, then consolidation, like a consolidation range, just after the low volume note. Yes, there. And yes, I was waiting for the buyers to show their intention, and as they came in and broke the range, I came in. Yes, there. So I came in there because they broke the horizontal range. That is a kind of pullback. Strange pullback because it's horizontal, but it was flirting with my low volume node, so I decide to enter because the buyers break the range, and that's it. And I target always some liquidity level. Yes, there. And I try when I can to trail my stop and to leave my stop to break even. I saw liquidity skew as Bruce shown now, so I knew that this thing will push up.
Okay.
That's basically what I saw, and that's basically the low volume pullback setup, and then, well, if all the pieces are there, I put risk on this one. My stop was in the middle of the low volume node, just below the horizontal range, the pullback. So I have no much risk to have there. It's a little risk, but the target was interesting for me, and so I get in.
Hey, all right. Well, let's turn it over to why don't we give it to Trading His Life. He's been trading the low volume pullback for a while now. So
Yeah.
yeah, get some feedback from him.
Yeah, hello?
Yes.
Okay, first of all, I just want to say thank you, Vinfra, for putting your stop loss in the correct position and not widen it and getting, if it goes against you, you lose so much. I think your stop loss was perfect from where you started to now. So I just want to say thank you for that. Great, great where you stop, where you see the buyers are defending, you see prices not going there anymore. And every time it goes there, buyers push it back up. So you placed your stop loss perfectly. The only thing I said, I think you got in a little bit too early because then you got caught up in a little rotation. Your entry should have been right after, right where you at, right where you have the mouse at, Bruce. You see the push up, then it comes right back down, then it goes right back up. Once it was going back up, your entry should have been right there, exactly. And then your stop loss is perfect. I think
Yes.
you traded very well. You just got in a little bit early. Your stop loss was perfect, just in case the trade went against you. So that's my
Yeah.
only comment. I think you traded it very well. Just be mindful of the entry. Okay.
Okay, if I may say something, for my stop loss, it's simple. I try to check where my setup can be wrong. I don't care about level. I don't care about price. I try to check where my setup could be wrong. In this case, it's just below the pullback in the middle of the low volume node. And for the things you mentioned with the entry, it's right. But for me, it's another pullback in the low volume node. This one.
Oh, you see, your price consolidated. You got
Yeah.
in right with the large volume right after
Yes.
the
Yes.
but that's not an
Yes.
impulse.
That's right.
That's not the
No.
impulse move. The impulse move is back down. As you see, it shot up, it went up,
Yeah.
then it went back
Yeah.
down. That's your
Yeah.
impulse move right there. Then it went back up. So that's why I said you went in too early.
You can go to the left, please. To the left. This is my impulse move.
This here is your impulse move.
Yes. Yes.
Okay.
This was my impulse move, and then I saw this kind of horizontal range that fought with my low volume node that I marked. Then I saw the big volume of buyers enter in the scene there, and I decide to enter. And then of course, we have this impulse move. We have another pullback and another impulse move. For
That's
me,
right.
That's not an impulse.
That's
That's not
right.
an
Vinfra
impulse
just
move,
he
Victor.
just didn't
As you can see,
show
price just went up.
he just didn't
The
show his
impulse.
Oh,
sorry.
That's not an impulse.
he didn't show his
one thing at a time, guys. Trading's Life,
Yeah.
finish up, and then DNT, you're next.
oh my bad.
Yeah, no problem. That's not an impulse move, Ventura. That's just price action going up. An impulse move is just one big. It's a like it says, an impulse move. As you see, it went up where you have the number 4, then it shot back down where you see the big red bubble. Then it went back. Then it went back up. This is just price action going up. Where you said it was your impulse move.
Yeah,
Go ahead,
Yes.
DNT.
go.
Yes,
Oh, Bruce.
we were in a horizontal structure on the left. Then we have this kind of move down, and then immediately the buyers goes up and create this low volume node. So I
Can I
thought that
clarify
that
for you,
was my impulse move, you know.
Vinfra? So yeah, I know what you're trying to say. You can't see it on the chart. He cut off the consolidation to the left on accident, I think. So you can't see the consolidation on the left of the chart. But it was consolidating and then it broke out. And then it consolidated again. And that's what he's showing. So number 2, he's showing the where it says number 2 area. This is the low volume pullback. Yeah. So
Yes.
you're missing the consolidation on the left is what I think what he's trying to say, right?
Yes, that's right.
Yeah. Yeah. You just can't see it on the chart because he accidentally cut it off.
No, because it's not. I don't had the possibility to this moment in this moment to have the whole picture, but because other way we have a range, a time frame really big, and it's not relevant for the setups. So the setup points. So that's right that we missed the range on the left.
Yeah, that's the range on the left there. Yeah, that was cut off.
Yeah.
Okay. Well, I don't know. As you guys can see, like I struggled with making some of these files for you guys to try to keep it really, really simple. And because there's a couple of I agree with both of you guys. It was cut off, and so you're looking at this as the impulse move here, where you came out from, but you did cut off this part, so we didn't know, and then it is you know, it's a long consolidation, and it took a while for it to reject and get the next impulse move, but it certainly is a low volume node in there. I can't recall if I called this one complex or simple. Oh, it says simple here. Okay, and I'm trying to keep it simple. I can't recall. I think I meant this to be the consolidation, but I'm not sure. And that this was your simple setup in here, to be honest. And that's your low volume. Anyway, because yeah, I'll have to be more diligent and try to make these even simpler, so there's no confusion on that. Because sometimes you get 2 or 3 because it's going to be trending. It's a continuation move.
Yeah.
So you know that's why I made the complex files so that you guys understand that that this is a you know, it turns into a bigger trending day, and you can look at multiple setups within those complex files, but that can be confusing. Anyway, yeah, to me from this markup in here, this looks like you took a breakout trade. This would be the low volume pullback. This would be like entry in here, and this would be take profit up here, which looks good. Anyway, and we have exhaustion in here. We don't have much else. I don't see an order book skew or anything, but you definitely exhaustion into just in front of this kind of low. I would say, I mean, I just have one quick, I'll turn it over to the coaches, but just one quick piece of advice I have seen from the replays is putting your stop in the low volume node in here can stop you out a lot. Just go back and are you wrong here? Would it come back in here just to test and then reject? If so, then maybe you want to keep it down a little bit lower. Try it, play it out in replay mode, and see if you get stopped out. And then once it breaks up here, you can move your stop up as per what we're talking about. Once it breaks there, you move this one up to about here, and then you took your profit really nicely at that liquidity level. I'll turn it over to David.
Thank you, Bruce. No, great chart in here. So really nice to see. If I was on the vol bars at the bottom, Bruce, I'd look to pull these up a little bit. I know some of us like our volume bars, sort of knee-high socks.
Yep.
That's a poor analogy, just to see, because I'm using the vol bars to look for those low volume pullbacks.
Yeah.
So we look across the bottom. There's green bars. We can see the price doesn't really come down that much when we get a little red bar, and there's plenty of opportunity here to have got in and traded. And my usual segue, Bruce, you get on top of these. You saw that today, where I might throw a chart into the chat. Straight out the gate on the cash open, the price is going up, and I know it's very easy. I remember as a newer trader, the price, Bruce, you'll talk to it. The price has gone, whether it's ES, it's got 20, 30, 40 points, and you're still sitting there thinking, when do I get in? If you can master the feel, like we were talking about with the stop run that we had with John earlier on, so you can get that. Where is it coming back? It's come back. Yeah, it's low volume. Okay, wait for the volume to come in on the bid, and in you go, and you're on, and off you go. So you don't miss out. So good stuff. I'll throw that chart in, Bruce. Actually, let me have a.
Okay.
Me. I think that's in there. That's UK time, of course. All my charts are. So if you perfect, Bruce. If you zoom in at sort of like what's that, 40, 50, yeah. You can see my red line. So this is a chart that John would have seen today in Spot Gamma. But look at the green bars that are coming in all the time. Yeah. But even to the left of that, Bruce, you've got the little red bars like I'm talking about. The price comes down. I'm drawing my trend line, which is easy to do. And I'm drawing that. I call it in real time. I'm drawing that, and the price going on. I'm drawing it, and I'm drawing it. You can see there's not really much red. So if you hadn't got in from the open, this is 20 minutes in, 30 minutes in, you've got chances the price dips back with that little red bar, in comes the green, bang, spank, bid, get in there, make some money. And the target here, as John will know about, was the 655, the cigarette number further up or whatever. You can see, that was the first sort of area. Although in the way were a couple of nasty, John, help me, a couple of nasty option levels in the way, but we've got through those pretty quickly at the time. So. But yeah, it's knowing these bars, Bruce. Trust in your bars. Trust in your instruments. If we had crash with us, flying at night, flying in the fog, trust your instruments, traders, and you'll be all right. There's loads on this chart, Bruce.
Yeah.
Anyway, yeah.
So let's see, John, any kind of feedback for Vinfra?
Yes. Now the chart that David was just showing, he showed everything. He showed the entire Bookmap chart. So Vinfra, my review of yours, it makes it harder to review if you're not posting the entire chart.
Yeah.
So if you go back to yours, I mean, it looks beautiful. You do a nice job with the header, right? But like what David's showing here, he has everything on here. I can see everything, and I can help you, I think, with things that you may not be showing on your chart. So if we can go back to Vinfra's chart, Bruce, right? Yeah, you're showing a partial. So for example, on the right-hand side, that column, I don't know what that is. Is that the chart volume profile, or is that the session volume profile that you're showing all the way to the right?
This is the chart volume profile.
Yeah, okay. But if you were showing the chart, I would know that. You follow me? It's just that because I did some of your trades for last week scheduled, and it was hard to work with because I didn't have the entire chart. I can bring it up into my software, and I can add my annotations just like it was my own. So hopefully, please consider in the future if you'll just you click anywhere on the chart, hit F12. It's a default hotkey for Bookmap. It'll save the the screen for you, and it'll create a chart. And please upload the entire chart so that we can see it and see everything, rather than kind of truncate it down, because I can't see the headers. Um, and then the other thing I wanted to mention with this, Bruce, is that you can see how the buy skew is moving with the market as it was coming up. So see how it's kind of
under
moving.
here.
Yeah, exactly.
Yeah.
It's just kind of moving up with it a little bit.
Yeah.
And that liquidity stayed in place for his target. So that was a nice read there. And he identified that and he had his target there. That's beautiful. So I wouldn't consider this really a low volume pullback because you really didn't get the pullback all that much. But I think it's more of a breakout trade, exactly, but very good, and yeah, certainly very nicely done for sure. But I just wanted to mention that about the full chart. If you'll consider that, that'll help on our end when it comes to reviewing it.
Yes, if I chuckle to myself here, John, I get quite a few questions on my charts, Bruce, because people go, can you, but they've got the full picture to be there to quiz me on a certain part of the chart during
Yes.
the day, as
Yeah.
John knows, Dave
Yeah.
off.
Yeah.
And I have other people helping me now, don't I, John? If you notice,
And there's a lot of good information there. It may not be the focus of what you're talking about, but I can see he's doing this,
Yeah.
and it's important. There's valuable information there, but when you cut it down, it really does collapse our ability to see everything.
It does. My good friend Luke, as you know, he's always answering mine.
That's it, Bruce.
Okay. Let's see. I don't know, D&T Trading's Life, if you guys have any other follow-up comments on this.
No, just agree with John. I mean, I didn't see the other side, but I think it's more of a breakout trade more than a low volume pullback. But
Well, I mean,
that's it. No comment. But it was still a great trade.
let me address that. So on these simple ones, I'm trying to just find simple examples. This is an impulse move. Here you got your volume, and then it takes a break and it does a rotation or two. It is on low volume. So we're waiting for this structure to break, and then looking for another impulse move after that. And the volume starts to pick up in here, and then hits the target. So that is the idea, that you get an impulse move, a bit of a pause, look at your low volume nodes. It didn't hit it here, but sometimes you don't get it. And instead, it just went below. These are some of the details you'll note time and again. On a stronger move, you won't get to the low volume node. It'll reject earlier, and in fact, it goes below the little swings in here. And sometimes you'll see some trap traders down here. Sometimes it just exhausts, like this example. You don't get any sellers, and then the buyers come back in, and then lift it. Okay, so and in fact, if you kind of look at these things, you'll see structure. It kind of does another one here, but then it's creating another structure up here. And that's the concept behind it, at least.
Yeah.
So, all right. Let's see if there's anything else that Moby marked up for you. Got another one.
Excellent. Good man, Moby.
Is this yours, Vinfra?
Yes.
Okay.
Yes. It's a trending move with some low volume pullback all the way down.
Okay, and this is gold here. Okay.
Yes.
Okay. This might be. This is more of a complex move, as you guys can see. The timing. Well, the time is still not talking a lot of time in here, but anyway, we have a structure up here. We see the break. Well, anyway, you walk us through, Vinfra.
Yeah. So we see the structure on the left and in blue. Then we have the break of the structure with an impulse move. And we have some kind of V for the pullback, which is the pullback in 2 times. And then another impulse move. And all the way down, each impulse move made create a low volume node, because the participants don't have any times to come in. So each time we have an impulse move, we have a low volume node, and I always wait that the pullback occur, and then when the pullback breaks, normally I enter. Sometimes I have this issue that I have to fix. I enter a little bit early. Yes, I had this issue with TLB8 trendline break and accumulation too, but I try to fix this. And all the way down, we have a low volume node, we have a low volume pullback, we have a kind of frac, and the third three that we have a wedge or a frac that pull back in the low volume node, and then it goes down very quickly.
Okay. I think actually I don't have the file in front of me. Again, like DNT was able to really quickly upload, or put the file into Bookmap. I don't know what I considered as the consolidation period. It might have been something like this, and then seeing the big volume, and then here's the first impulse move. This is your low volume pullback, and then this is the second, and then there's obviously another one down here too. I'm not sure, but this is really in my opinion, like this is all kind of in the range, and I don't see that really big impulse move unfold. I see it here, and we know that's going to be a stop run too, but nonetheless, and then we do get low volume in here. There's a little bit of a volume spike here, but that's going to be a trap, and then you start to see this come in again in here with the selling, and then you get your second impulse move. So I believe that's what I was looking at, but I can't recall. So yeah, it would be this, then this. And yeah, your target's beautiful. You nailed it here, right in front of that high liquidity, and you retraded it here. Again, I think this is a good one here.
Yeah.
On the retrade, and again, taking it down, and you trailed it here, and I see you got stopped out. Anyway, on these kinds of things in here, just a quick detail before I turn it over to others. I would recommend retrading this again and try doing your trailing stop. So this maybe you can learn something from it, and this won't happen again.
No, sure. Sure, because and the things that I want to say, I never trade gold or crude. Yeah. So it's the first time for me to do this.
Yeah, that's nice. That's
fine. This instrument.
It's great. I mean, this is a good introduction then.
So anyway, I will retrade it a lot of times before to have the confidence enough to do this later in life.
Okay.
But normally I trade essentially ES and a little bit NQ. I have on my candlestick charts, I have the correlation line with crude and NQ, and that's how I've traded till today. So that was the first time that I traded gold, and the number 10 it was crude, and it was the first time too. So
yeah, Great. Well, there you go. That was done by design. Was to put in some other instruments that are pretty common that a lot of people might want to trade, or maybe they don't, but they would have their first kind of leg into something different. Let's see, David, can I turn it over to you, sir?
Yeah, well, I think you've covered it pretty well there, Bruce. As you say, the volume at the bottom on the SOC level is not really impressive, is it? Has to be said, until, as you'd marked out, when you get that slight sort of complexity, yeah, around about there, sort of 1420, do you actually get some action? So I think, yeah, you're pretty much there. On a personal level, I've not been trading gold for a while. I don't know if you have, John. I find it just, maybe because I'm having too much fun on oil, but it's really, there's some moves, certainly my end, I feel it just don't make any sense. But John, what do you think, sir?
I agree. Scares me to death. No, I don't touch it. No.
Yeah, but good practice all the same in demo, that's for sure. But yeah, there's been some brutal moves on it. So yeah, sorry, Bruce, it's not open, is it really?
No, that's fine. That's fine. I mean, look at the liquidity. It's very thin, as you guys know,
Yeah,
and
it is.
and
Yeah.
it is kind of hard. But nonetheless, going over the same kind of concepts again and again.
This is true.
Of what the structure is, what it looks like in different markets. There's another thing that's pretty nice in here too. Here is the order book skew and reaction.
A bit of bullion.
Yeah.
So look for those things here again. Flip of the book. So I'm pretty sure this was the bigger structure because because of the book flip here that you see. They're on the bid, now they're on the offer. But
yeah.
I'm speculating again. Okay, so let's turn it over to D&T.
Hey, Vinfra. I wasn't sure. I wanted to bring it up real quick because I'm not too sure if you had something to follow up with on the previous trade or not. Because it seems like me and you kind of both took the same trade almost there. I don't know if you want to follow up or if you wanted to think about it for a second, if you might have forgot while I reply to this one real quick. Yeah, no, Bruce, you highlighted that larger structure, that horizontal structure.
Yeah.
And then so the trade, yeah, right there. So then you get like the strong impulse out of that. And this was one of your low volume pullbacks, which was a complex file. And
Okay.
yeah, so I haven't done this one yet, but just looking at it, it looks like if there was a high of day or something that was created at 3 o'clock, or I'm sorry, 13. What time is it on his chart? Let's see, 1400.
1420. Yeah.
Yeah, if the high of day was created at like 1405 ish, then and then you would anticipate maybe the market to kind of come back up and retest it. So we were missing some context here, but you just see it getting slammed and you just see the impulse going down. So without any context, and if you're just trading it, you're looking at a larger structure and you want to see that conviction move. You want to see that impulse out, because otherwise you don't really know what's going on. You would anticipate, I would anticipate it to go back up again, but once you get that conviction move, and this has been kind of happening a lot lately, where you get these like larger time frame players where the price action is a little bit more skewed than normal, and you don't get that retest of those highs again. It just kind of goes down and just gives up or exhausts, and then you get that impulse move down, and you don't really get your trade. Just kind of leaves. And then you see it going into an imbalance. So assume like just in the replays alone, you see that conviction move at like 1420, that large impulse move, and then you get that consolidation, buyers try, and they just can't do it. Then you get another impulse move. Then at that point you're like, okay, well, if the first one wasn't convincing you that it's going into an imbalance, well, the second one definitely is. And it just keeps going down. These are all really cool replay files, Bruce, because these moves have been happening a lot with these larger players and this news events and stuff like that. You don't really see but this type of micro price action, this type of price action does happen a lot. So looking at it, practicing it, observing it, like understanding it, I think is really nice. So thank you for posting these, Bruce.
Oh,
Good job, Vinfra.
Yeah, good job, Vinfra.
Thank you.
Yeah, thanks. I mean, like I said, I struggled with this, and it was getting complex. And some of these complex files, it was kind of clear to me, like, come on, it's trending. You guys know this. But then when you look at it, the setup's not there on some of these other impulse moves, and it's like, well, I can't post that. Then it's going to confuse everybody.
Everyone.
And so one thing I want to just mention as a takeaway here on this one is here, and then I'll turn it over to Trading His Life, is Vinfra, stay out of this.
Yeah.
Don't get involved in this. Look for this. Look for the impulse move. This will save you so much time and so much like emotional capital and just so much frustration and money. So wait for the impulse move to unfold and then look for the low volume pullback, because we want them to kind of show their hand, and you got to stay out of the chop. If you're, I don't even want to go into trading the chop. Just look for the impulse move in these files. Look for the low volume pullback. I fell into the same trap, and I probably will, like live doing replay modes in some of the upcoming check-in webinars that we'll have in the afternoon for the pilot program. I still get duped and take some of these trades where it looks pretty good because there's not a whole lot of data in the file. But anyway, just wait for the big impulse move. It should be in there. And then look for the low volume pullback.
Okay.
Yeah, that would be my biggest takeaway here. Trading His Life. Turning it over to you, sir.
Yes, thank you, Vintra. Yeah, I agree with Bruce. I think that was a little, but you said it yourself, that was a little premature getting in the trade. Other than that, I thought you traded perfectly. The only thing I would have did was just trail my stop instead of going in and getting out and getting back in, getting out, getting back in. The fee is gonna add up. If you, like Bruce suggested, if you do this, replay this again, just trail your stop, because as it was going down, it's creating lower lows and is not revisiting where it originally came. So that means sellers was defending. But I would have just trailed my stop. Every time it created a new low, I would have just moved down and trailed my stop. Other than that, I think it was a nice trade.
Okay.
Back to you, Bruce.
Thank you.
Just one more comment on the trail stop and Trading His Life, if you can confirm how you would do it. If like this trade here, this is you took it right, and in fact, you're starting to see that selling come back in. It's breaking a small structure here. This looks good. Gold. Well, everything will do this. You'll see this one more push, but it didn't break structure up here. You stayed it.
Stop would be.
Huh?
That's where my stop would be, right there.
Yeah. So if your stop is up here and you're let's suppose either here or here. I know this is a little early. Ideally, right here. Wait for those rotations. Wait for a trap. These guys are trapped. They're gonna puke. And then as Trading His Life is saying, maybe your stop can go here. And then in terms of trailing it, now it broke this range, right? It comes back into another low volume node in here. You don't move the stop until it breaks this one down here, then move it down to here. That's what I would do.
That's what I would have did as well. Until it showed me is defending that area, I wouldn't move it. Once it makes a new new uh a new area, then to defend, then I will move it.
Then you move it. Yeah. So you're kind of like giving it some air to breathe, you know, as it's trending, because otherwise, you know, you can really get taken out by just kind of random swings back and forth. It's telling us that it's accepting now lower, therefore you should be okay up here. Again,
Exactly.
I would be careful about the low volume node in here. I'd put it probably a little bit above it, but that's me.
That's fair, Bruce.
Okay, let's move on. And guys, we don't have a whole lot of
Okay.
time in here, but I want to get to those in here. God, I don't know if we'll get to all of you guys, but Tomy, we haven't had you up on the stage. Nadia, we've had you a bunch of times. Nan, we've had you, and PMAG, we've had you once up here. So we've got content from all of you guys, but let's start off with Tomy. He's been putting a lot of effort in here. So let's jump over and let's see what we got here. Okay. This one. Let's bring you up on stage.
All right, can you guys hear me?
Yes,
Yep.
welcome. How are you?
Good. Thanks for having me, guys.
Welcome, buddy. Welcome.
Yeah. Well, thanks for all the effort and energy you're putting into this. And it's taken we had to kind of comb through you a little bit to get you back into replay mode and stop being distracted by the live market and the indicators and everything. You will learn so much faster, believe me. Anyway, why don't you jump in here? This is a low, or is it a low volume pullback? Yeah, low volume pullback. And you've just started doing some of these.
Yeah, so I think this one was the trendline break accumulation. I think I
sorry,
told
you're right.
this today.
You're right. Yeah.
Yeah. So basically, I was waiting for this move. I had like 3 levels of passive accumulation. Then I was looking for this horizontal structure to form. And my key level was London high. And basically, I was looking for this heavy liquidity zone above at 6555. And normally, if price goes up to that level and clearly rejects from it, and it kind of builds up this horizontal structure, if I see aggressive accumulation coming in with a horizontal structure break and the trend line break, that I usually enter. Here, my key level was London high. I had passive accumulation. I had aggressive accumulation, and I just took it, I think, off of the horizontal structure break. And actually, I was really disappointed because I got stopped out pretty fast. Not sure what I did wrong there, but I definitely had a lot of passive accumulation. I was waiting for the aggressive accumulation. I was waiting for the structure break. I had a key level. I had heavy liquidity above. So I'm not actually sure why I got stopped out there. Yeah, that's pretty much it, to be honest.
Okay, this is a great subject to go over, making distinctions between when, like Duzman, for example, he did this a lot, and we'll talk a little bit more about it. But I'm going to turn it right over to Trading His Life, and then DNT. So you guys are the experts in this setup here.
Oh man, you should see me. I'm sitting here like, pick me, pick me, pick me, pick me.
Love it.
Yeah, Tommy. So you entered right. Bruce, can you show where he entered?
Me too. 47.
It's better. Yeah.
Oh, he went short.
Yeah.
And
Okay.
he got stopped out right up here.
Okay, good. Now look at your the trend line broke, right? But look at your you didn't, first of all, it broke. You didn't wait for your pullback. As soon as it broke, you just entered. You have to let it retest.
Right.
It broke, you entered, Now, look at your you have no liquidity below for price to go to. No, like John would say, no liquidity, no enter. All your liquidity is above. You have no liquidity below. You have shorts, not that much. But now let's talk about your passive and your aggressive accumulation. Look at before the trend line break. You see majority are green bubbles. You see a few red, but majority of it is green bubbles. And look at your volume. This is trap. So if you would have waited for it to break your trend line, retest it, then come back down, then it would have been a valid trade. This is why I kept saying in the pilot program, you guys have to wait. That's one of my criteria. I wait for the retest, the pullback. I've been saying this for a very long time, but that's why you got stumped out, because you see it went price went back to give me 1 second. My screen just froze up on me.
Oh, okay. I think we might have lost him.
Hello?
Oh, there you are.
Yeah, my screen just froze up on me. I'm sorry, Bruce. You want to come back to me? I can't see
Yeah,
now.
yeah, sure. DNT, turn it over to you.
Okay. This was today, right?
Yeah, yeah.
And was what time is this? Was this the first test of the overnight? Oh, the London high. Okay, so 55, 52, 65, 52. So and I think we just discussed this type of. I think we just discussed something like this earlier, where earlier today, I think David posted something today too, where he was showing the market and all the buyers just slamming it this morning.
Yeah.
I mean that. Let's just say, for instance, you heard everything that Trading His Life just said, and you wait for the pullback. And let's say you did wait for the pullback, and then you enter. Let's say you entered at 65.50, where that high volume node is. Well, you get the pullback to 65.50, and let's say you entered short. Well, your horizontal, your stop is going to be above that structure, maybe like I mean, in theory, it shouldn't come back to the top of that structure, but your horizontal structure is not even, I don't even know like why you drew your horizontal structure like that. Your horizontal structure, I think, would be the cluster where the price action is actually at. Yeah, like that. So your stop would go slightly above the structure, and especially if you have that liquidity up there, that would give you at least a really good risk to reward. If you did take the trade, just say, for instance, it might not be like a great setup or something, but let's say you got the pullback and you entered at 65.50, you put your stop above that structure. If it breaks that structure, it's more than likely going to go to that liquidity. You don't know if it's going to go in your favor, and when it immediately goes against you like that, sometimes it just happens. But that's just not going on any context or anything like that. I do like to wait for that pullback, as Trading His Life mentioned. And if you don't get that pullback and it just goes without you, then that's okay as well. So that's something like that I was talking to Tim S in the pilot program about.
Nice.
Is if you get this consolidation and it just impulses out and you don't really get that pullback, well, that's okay as well. Like, We have to let the trade come to us and let the trade fit our risk and our what we have to let that trade work for us. We are not working for the trade. So like don't force it, wait for it. And if it just goes without you, then it goes without you. And then you have the low volume pullback for a second entry in case you do miss the trade. It's okay to let that and that's one of the things that we really have to learn in the pilot program, trying to thinking that we're going to nail every reversal or something like that is not how professional traders work. We fit the trade into our playbook, and then we take the playbook and then we wait for our location, and then we put that and then our scenarios and the context. And it's not just taking the setup everywhere we see it. It's taking the setup in context, in line with our playbook. And then we get defined risk based on our structure, based on the structure of the market, which is this horizontal structure, and then the setup. And then you set your risk reward, and then you place your trade if the trade comes to you. Don't force it. And if you miss it, then wait for it, because you can get a second opportunity with the low volume pullback, assuming that you still have room to your presumed target for the low volume pullback, for the continuation trade. So does any of that unclear?
No, it makes sense. Thanks for the feedback.
So-
So
Okay.
would you want to
Bruce,
try?
come back. Can I say something?
Sure. I'm sorry. Let's open it up for Tomy. And guys, let's try to keep it kind of. I'm sorry I don't want to. This is why we go 2 hours in here, so we really explore these things. And there's lots to learn from and go over. But if we can kind of hurry it up a little bit, just because I'd like to get some of these other guys up here. They've been doing some great work as well.
Okay, just
Yeah.
to answer Tommy's question, you said you wanted to know why you got stumped out. First of all, just keep this is food for thought. Keep this in mind. Look at the where you entered, large red bubble. Look at the volume. Volume rise, right? But price didn't go nowhere. That's clear sign of absorption. That's telling you institute buyers are buying all the sell orders. That right there was your sign not to get in.
Yeah.
You see that? You see the volume, the red volume, big red bubble, but price did not move. That's absorption. That's where you stay away from. And let's say you got in it. Look what happened right above 65.50. That's buyers defending that. That's where you should have got out. Price went, it went down a little bit and went and kept going. That's where you should have been. That's where you should have exit. But to answer your question, then I'll be done. That's why the trade went against you. You got in doing absorption. Okay, Bruce, that's all I wanted to say.
Okay, moving on to John.
I posted a chart into the chat. Could you bring that up, Bruce?
Yes.
Beautiful.
Okay. So I just marked up this chart. I just found it in the chat as an example. But I have the arrows marked A, B, C, and D. And you can see how above the price action lies most all of the liquidity. So at any point in time, you can look at a chart and say, where's the imbalance of liquidity? And for A and B, the imbalance of liquidity is above the price. What that tells me is that the market is interested. They see the fair value of this instrument higher at this time. That's where they're interested in engaging trade. The reason why those liquidity levels are posted up there is because large traders need liquidity to trade. So they're advertising. They say, we're long here and we'd like to sell up here. That's what that's saying. So I try to position my trades to where I'm always working toward that liquidity. And so if we move over to trade C and D, you can see that the imbalance of the liquidity has shifted. It shifted now to where the liquidity is below the market for the most part, right down in there. And so you can see in this instance, I want to position my trades to where I'm working towards that liquidity, because that the market is saying that we believe fair value is cheaper. than where price is right now at C and D. So now if you go back to your trade, can we go back, Bruce? You see where you got in, but you see where the balance of liquidity is. It's above, and that's going to work against you.
Yeah.
Does that make sense?
Yeah. All right.
So right there, that should disqualify the trade for you. You won't have to do this again. If you study what I just said, and only that, just forget everything else. Just look at reading the liquidity. I think that usually that's going to put you on the right side of your trades. I hope that serves as a good guide for you, Bruce.
Yeah. Thank you.
If I can just add real quick, that what John just mentioned is part of your playbook. That's something that you build into your playbook. So it's something that you're observing secondhand to the setup. And what he's telling you is it's minimize or narrowing down and minimizing or you see these setups all the time. So you need a way to narrow it down to minimize it so that you're not taking every setup, but you take the better setups, the best setups. And this, what John just mentioned, is something that is like part of your playbook. And that's the playbook. That's the academy. That's what we're talking about.
That's what I said. All right, let's move
on. David, any comments? I think you posted something in here too.
Yeah, if you take the last chart, please, Bruce. This is from today. This is from oil, and I think I dragged quite a few people on this trade today, John, including Brent. My trend lines, I am drawing them a bit thicker, and the point was quite pertinent, really. You can see the oil price is dipping quite a bit below that trend line. You can see the gaps because I draw it, as I said, as it goes along, Bruce. And the point I was saying to traders this morning is that this is not a break of that trend line. You can see all the big green vol bars, Bruce. You know, my socks are really high. They're really high. These are Victoria's Secrets. They're really high, okay? But look at where the blood is much further up.
Yeah.
You know, we went up to 115. So even though the price, and I'm not trying to be, you know, too sarcastic, even the price was coming below the trend line, there's no clucking way would I be looking to short yet. I wouldn't. You know, it's a buy. Those little dips, like I said on my other chart, you've got these little low volumes. So if you weren't in the trend, and guys were asking me this morning, where did I think we'd get there? And of course, I got to be careful what I say, not giving trading advice. But this chart, you know, you got those little red bars, Bruce, high green bars. Buy that dip, and off we went, and it scooted up. I said to 115. Anyway,
yep.
Labour the point. Back to you, Bruce. Sir.
Yeah, let me. I'm sorry. Go ahead. You had a question.
If you don't mind, yeah. And this underscores the interaction between liquidity and volume. That the trading volume is trading toward the imbalance of liquidity, which is above. So first is liquidity, and then what's happening with the volume. So it's always a two-component question for me. Where's the liquidity? Where's the trading volume? Is the trading volume trading towards liquidity? Now I've got something. Now I've got direction, and that's what this chart shows. And even though, like David said, you're going to get those pullback and those challenges, if it's clear in your mind where the liquidity, where the imbalance of liquidity is, and where the volume is coming in, and how much volume is coming in. Are there more buyers than sellers? Well, there are grossly more volume of buyers coming in here, and the liquidity is above. That's it.
Yeah. And on my chart, you'll see CVD, which is session as well, which gives me another flavor as well.
Yeah.
You can see I've highlighted it there to my fellow traders in the bottom right.
Yeah, and that smooths that out, David. But I mean, you can see your volume bars. I mean, it's clear.
Stevie Wonder can't we? You know, am I going long? No, I want to go short on that one. Yeah.
Yes, sir.
I just, really good feedback, Tomy. There's something for me really critical in here. And this is something that I know you, others, Duzman has been, I keep bringing him up as the shining example of exactly this. On a trending day up, he had the passive liquidity getting filled. Clear as day. Okay, check the box. Structure break, clear as day, check the box. 65.50 London high, check. Sellers start to come in. That's where this is a kind of a check, but not really. So here's what's going on, and this is what I view from it, is in this area in here, we do not see yet the transition from buy side to sell side. In fact, what it is here is a low volume pullback.
Yeah, that's fine.
So this is a trap into that high liquidity, like an absorption, exactly like Trading is Life had mentioned, and then we're looking for the continuation. This is where we want to see this transition happen from these buy bars to sell bars, and we just don't have enough sellers in here, and it hasn't transitioned over yet. I'm kind of curious to see, maybe it did later when some liquidity started to come in, but I don't know. Anyway, one of the examples that I continue to bring up is from that reversal strategy in here, and this is the inverse head and shoulders of sell side to buy side shift. High liquidity getting filled, high sell volume, but then it absorbs it, and then you start to see buyers. Then you see a lot more buyers. Then you see less sellers, and it makes a higher low in here, or maybe an equal high, or maybe a higher high in here that does not accept. Then we look for the the buyers to come in again in here, and then once they start to come in again in here, those aggressors, that's where you're looking for it. And we're not there yet, just not there yet. That's what I see.
Yeah, thank you.
Nice.
And this is where, like, I think we're going to see a lot of this in the future, because people will look at this and now they have another setup that is exactly the opposite of this in this area in here. This would be the low volume pullback. In fact, it's not. It's actually kind of a good one, to be honest. But anyway, another thing, Tomy, like, you're taking a replay file from today, and I mean, that's good. It's outgoing. I don't know how good the setup is going to be, but anyway, go back and retrade it. Retrade it again and again. Look at it as a low volume pullback in here, and as a setup, and maybe that'll be helpful as well.
Yeah.
Yeah.
Okay, let's move on. So Tomy, thank you, and thank you for all your
Thank you,
effort.
Tomy. Really
you, guys.
good.
Thank you.
Really good. And while you find that file, Bruce, if I can, wax on a bit, what is great about the Academy here is that you've got John, you got me, you got others sharing live files from today where we're using your setups within the pilot program and showing you how we were trading.
Yeah.
So learn those and you can trade like John does, politely, rudely. No, right, John. So we're not cherry picking. These are from today. That's my oil from today.
Yeah. That's the beauty. Like, you guys know the concepts, and it's like, oh, well, here's another example of that.
That's it. Yeah.
So because it
not
repeats.
find me one for the last 30 days. Yeah.
Yeah, exactly.
We've just covered.
It's a blessing to have you guys in here. So thank you all.
Family.
Yeah, we just covered the from earlier in the session. We covered the auction from today as well. As you I think David posted a chart earlier in this session of today as well. So this what we just talked about with Tomy is what we said earlier in the session goes for this trade as well, context wise, and everything that you mentioned, because it's the same day.
It's the same day. It is. Yeah, it is. Yeah, with the BTD, as we were into that ramp up on the cash bell, but it was ramping before that. Yeah.
That's right.
All right, let's see, guys. I think we've got enough time to go over one more, and let's see. Oh, I don't know. Look, I'm sorry, we're running out of time. Like I said, we have Nadia, Thibaut, Zaybek, PMAG, that have all been doing some really great work. I think let's go with PMAG. Haven't had him up for a bit, or had him just once before. Nan, you've been doing just really fantastic work. Keep it up. And you're looking at much higher time frame stuff as well, which I love, because you're understanding the context of that higher time frame within the order, and sticking to your plan, meeting or matching that with time of day, etc. Nadia, putting in great work there, and jumping into the low volume pullback as well. We'll go over more of your stuff in the near future. Tiboho, great work as well, really great work. You're learning just tons, and it's working out for you. It just stick with the process like you are. It's beautiful. And Zaybek, also, just really very clear, concise stuff. So that said, let's get PMAG up on the stage here, and we'll jump into this trade here. Welcome, PMAG. You are on mute.
Can you hear me now?
Yes.
Answer. Welcome.
Yeah. Well, the funny thing is that when Trendy left said, take me, I said also, take me, Bruce, take me. And you did. So I appreciate that. Which one, which one do you want me to talk about?
Well, we've got it up here.
Let's see. Give me 1 sec here. All right. Yeah, that's the one from October 22nd, right? Yeah.
Yes.
So I think as Bruce, I think you pointed out, sometimes you start with looking for a trade line, and all of a sudden this trade line actually is not a trade line. It becomes a low volume profile, or some type of a flag or wedge. And this is what happened here. I mean, basically, I start to say, try to identify a down trend line, that is. And that, in essence, was the continuation of a previous LVP structure, which is not shown here, but it is the same day and, just a session just after the previous one, which was LVP. And all of a sudden, I realized that actually there's a trend line there, and I followed, and that there was sufficient passive accumulation, as you can show there. And I was pretty much happy. I said, hey, I mean, soon enough, it's gonna break, and I'm gonna find this point, and I'm gonna just, go long, and I'm good. But then it changed. Then it went sideways for a while, and this is where I start to identify what I think is a bearish wedge flag, which is indication, of course, that the trend line, downward trend line, will continue, and that's what I did. In essence, basically, this is where I went short, being happy. And that's the funny thing about, or interesting about the market, is that you feel that you're good, and all of a sudden you've been surprised. So I was stopped out, and then at some point I realized, hey, this is gonna be the break of structured trend line. Just after that, this is where I waited a bit just to ensure that, to be sure that there is enough aggressive accumulation on the buy side. And I went long. And one of the things that you mentioned before is that, instead of having short trades, going long and then exit and going long again and then exit, just find a point that you can ride the wave and take it to the nearest liquidity, which in essence is there. It's just that I didn't think about that when I did that. And in hindsight, I would say, why did you trade like that? I mean, you could trade once, get long and just wait. And at some point, you'll make many more points than just the number of points that you made. So that's more or less what I have to say about this trade. Instead of
Okay.
having two trades, yeah.
Okay. Yeah, I think let me just kind of open this one up, and then I'll let you guys jump in. And you got a lot of trend lines and a lot of things in here. And it makes me kind of cringe to see, like, you know, trading some of this stuff. What, you know, because we've opened up the low volume pullback. I mean, and it's here. It's in here. And you traded it.
Nice.
But on the other hand, like, you know, this is what I was trying to cover, or maybe even this trend line here. Or maybe even like this one, somewhere around in here. What we're looking for in here are a number of things. I'll go through it quickly, and then I'll turn it over to you guys. First, you know, that accumulation. Okay, passive accumulation, 1, 2, 3. That's good. Key level 6750. That's good. We never get the transition in here, so that's good. We get one more dip lower, about 10 points, which we see all the time, and then we start to see the move back up, and then we're starting to see not the transition yet here, but it's coming in, and then you really get it over here, right? And then it breaks this horizontal kind of structure in here, and you know, it really comes in, and you can see. Then this is what John, I imagine, is going to say, is because he's looking at these transactions in here, and he's pairing it with this up here as target.
New level. Yeah.
Yes.
And but for him, this has got to be like an options level. That's the only distinction. And then looking for those aggressors, one pocket, a lot more. Now, if you got aggressive and you took this one in here, I think it's okay. Just make, I would take some off up here though, because it's not clear that this is going to break yet.
No.
Then once you see this in here, you're like, oh, okay, yeah, this looks pretty good now.
Yeah.
But anyway, I'll turn it over to John because I already kind of stepped on his feet.
He stepped on my feet. I think it's a wonderful trade. And what makes it great is the volume coming into the market with the volume bars on the bottom. It's very clear where that transition occurs, where buyers start to take over. And that's where I want to be. I want to be when everybody's coming into the market and they're buying like crazy and the liquidity above is well defined. You've got a little bit of skew under that market, under the price. At that entry
here
show
or
the
under
skew.
here,
Yeah, a little bit of skew coming in, but you have that, you know, you have that resting liquidity that came into the market, you know, just at what, 1040, a little bit earlier than 1040. So that was clearly defined and intentional. To me, that's how I read that. And then when I see the volume come in there, that's what confirms the two. So that's what I was talking about earlier: liquidity and volume working together and you know, synchronized together. So I'm not in favor of the trades that you took earlier coming down because you're trading right into liquidity. I see that as just the first one, Bruce, where you got short. I mean, you're just, yeah, you're bucking liquidity right there. You're gonna have to jump that fence. I'm glad that it worked out for you, but you see the difference between the two. You've got that liquidity right in front of you, which is fine. But here, when you're taking the long, there's a lot of distance before you get up to that liquidity. It just seems like it's going to be an easier ride up. You follow me?
Yeah, I do.
Okay.
Yeah, appreciate it.
Yes, sir. My pleasure.
Yeah, I think one of my questions, John, is, as I said, I mean, I think one of my challenges is decide where to enter, basically. So we have the break of structure trend line. I mean, where exactly to enter? Because many times I find myself wait for that opportunity to enter, and then I wait and wait and wait, and I miss that opportunity, and eventually say, "Whoa, it's time to get in." And that's what I do, and then I just make too few pure points instead of making all a lot, as
Yeah.
you mentioned, because the volume comes in.
Yeah. I think if you key in on number 4, the aggressive accumulation, when you see that difference come in, I like to trade with volume, like I said.
Mhm.
Bruce said it a long time ago. over 6 years ago. That volume moves markets.
Yeah.
You know,
Yeah.
not retracements, not Fibonacci, nothing else. It is
No.
volume that moves markets. Volume is your friend. So I
Indeed.
see that, and it's clear. In fact, it was clear on the left-hand side as you were coming down. You had a lot of volume coming down, which caused you to enjoy those trades. But I would say, you know, just keep your eye, and you identified it beautifully here by your aggressive accumulation. You put that rectangle bar in there, you recognize that that's the catalyst, I think. That's what I love to participate in, because I can watch that volume, and when that changes, I can get out real quick. I want to be with volume and
Awesome.
to the targets above. Yes, sir.
Awesome. Thank you, John.
Yes, sir.
Appreciate
My
it.
pleasure. Yes, sir.
Let's see. David, turn it over to you, sir.
Thank you, sir. What a chart. Love it, Bruce. Love it. Love it.
Yeah.
Well found. I can echo everything John and others have said. If I can get you, please, Bruce, to zoom into around about 10:47, 48, just right at the dip, at the bottom. Yeah, that's it. Now, I will have explained what I do on these, and now sure, we may be missing some key levels. Respectfully, there could be some option levels, as you've all called out. It could have been, you know, low of the London session, low of whatever it was. Who knows? But when I see this, and we saw this today, we see every day actually, David, you're selling until you're not, and you're buying. Now I agree, the buying here is not fantastic. It's not, you know, it's not rip roaring, but we have got a little sort of higher low getting printed there, Bruce. Just on that, you know, got the fat red. That's it. Yeah, that there. I am marking on my charts. Now it's a static chart here, but the price does pick up the angle. You know, I haven't said that tonight, have I yet, Bruce? That angle of that angle of attack is showing me pace in the photograph. So there, David will be looking to get in, often with a single that they can then scale, but it is high risk, Bruce.
Yeah.
But you're right, the trade is on the far right, where, you know, number 4, that is here. Volume comes in for John. We've got the upper liquidity, but, you know, I'm just showing what I'm looking on these live actions, Bruce, as I've shared before.
Yeah. Well, I mean, you're very, very aggressive, as we know. But you're really tuned into these things. So I mean, like, here's the trend line break and accumulation on the smaller time frame. No question.
Yeah.
You know. So here's your accumulation. You know, I think your trend line could be. You know, I don't know how I feel about drawing it like this, or you know, like this. Or like this. Supposed to draw it like that, to be honest, but like anyway, then it broke this structure here. The one thing that we've got though here is the double bottom, and the you've got a little cluster of buying, and then there's no selling. So here's your divergence. This is your double bottom.
Beautiful.
This is what you're looking for a double bottom setup, and then waiting for those aggressors to come in. I'll turn it, if you're done, David, then we'll turn it over to
No,
DNT.
I am, but I'm just going to say, please, rudely, what Stephen rightly calls out, what Tom would say, there's a lot of buyers on the left of what we've just been talking about, Bruce, and when this price starts to go up, you could be burning some tight stops. You know, sellers are on the chops. Great point there, Stephen. Yeah.
Thank you, David.
DNT.
PMAG, I tagged you in a message in the academy just now. It's the same feedback I gave to Tim S this morning, which is this is why we so basically Bruce mentioned the doing the replays and focusing on the transition from the sellers to the buyers in this case, and the structure shift, and then doing these replays. This is exactly why we do these replays, and this is what separates you from this is what separates us is these replays, focusing on these transitions, focusing on these structure shifts. And sometimes it's obscure, and you start to understand the obscure setups, and then you start to understand the obvious setups, and there is a distinction between them, and you have to understand like how are you going to execute on the obscure ones, how are you going to execute on the obvious ones. So it's just, you kind of have to make that distinction for yourself, and set your risk parameters on how you're going to try to execute. And I think John and David both kind of mentioned trading within the volume and trading with the volume. I tend to lean a little bit more on microstructures. So if you were asking like where I might have been looking for a trendline break accumulation, well, once you get that retry, it tries to retest the lows and it couldn't, which is what David mentioned, and then it impulses up, and then it breaks, and then it starts to break high. Well, that little structure where it breaks high and then goes down a little bit and then impulses up again, that's a microstructure that you can draw a horizontal structure around and define risk around. And then you're aiming for their first targets, that first liquidity right above. You know, if you get a pullback to that structure, and that kind of gives you some risk to reward ish. It's like a low volume pullback. So I can't really grab that long from the trendline break accumulation, but I can try to get the low volume pullback, which is just prior. If you draw a horizontal structure just prior to 1050, just prior to 1050, there's a small little structure right there. Yeah. Yeah, right there. If you draw a little structure right there, a horizontal structure from 76.46.
Yeah, right in here, basically.
Yeah. If you use that little microstructure where it went up and then down and then impulsed up again, yeah, and then you get a low volume pullback, kind of ish to that structure, to where that little high was at. Go to the left a little bit where those sellers were slamming it.
You're losing me here. Here.
Okay, so here. Just after 1050, like 1052. Here. Yeah, right there ish. So that's where I'd be looking to kind of enter, and that's kind of how I look at it. Now, if and I'm longing where those sellers are activating, and I'm aiming, and I'm basically buying that selling is what I'm doing. When it pulls back in like that, I'm trying to buy that, because I at least have something that I'm leaning on, which is that structure that we just defined, just right there.
Trading is life.
Hello?
Yes.
Yeah. The only comment I have, you asked, how do you know from the transition from sellers to buyers on the, like Bruce mentioned numerous times, you have to look at the dots and look where the transition happened. I see you traded this perfectly. It broke the structure. You waited for the pullback, but just because the pullback doesn't mean you get in, because the transition did not happen yet. The transition didn't happen until after the second pullback. Then you see the green bubbles. Exactly right there. You see the green bubbles. As the green bubbles are getting higher and higher, you see there's more volume. There's more. The bubbles are getting bigger. So technically, I would have entered right where you're right there, Bruce. Right where you have it, and my stop loss would have been right below that. So this is more like a low volume pullback, exactly. And then I would have just rolled it up into the liquidity and just trailed my stop. The second entry, I think you entered perfectly, but just keep in mind, just look at the transition from sellers to buyers. Like before your trend line broke, look all the red dots. Then it broke. You barely see any green dots. Then it broke again. You got in the trade. It's still more sellers, and look, barely see, and look at the volume. Look at the volume. There's barely any green volumes at the bottom. So your transition didn't happen yet. So just keep that in mind. And that's the only comment I have based on that. Other than that, I think you try to do too many things at once. I just focus on getting base hits and not to confuse yourself. And then after that, once you really understand the concept, then you could, because I just don't want you to end up getting burned. So that's all. Thank you, Bruce.
Thank you, Trading's Life. I'll follow up on that and then give I think David the last word. But because I really like that comment, Trading is Life. That's what the replay files are here for. Learn from. You took multiple trades here. You don't. I mean, actually, in this, I think it was actually pretty good because I think you learned a lot about some of these and like, oh, I don't know if I want to do this or I don't know if I want to do that. Come back in and retrade it again. Look for these things, these key things, these transitions, and that will help you tremendously. And then just trade it once because it takes out the sloppiness. Because you can just speed it up, just speed up the file, and you don't have to sit around and wait. But one trade in, one trade out, so you really focus on the execution and trade management, and just do it. Like this, you could retrade this probably 10 or 15 times, and look for these things. And go over it again and again and again. How would you do it? I mean, there's even a low volume pullback over here, that we weren't covering back in October. But anyway, good stuff. Let's turn it over to David. Welcome back, David.
Too kind. Thank you, sir. Thank
we'll
you.
give you the last word here and we'll close out.
Too kind. Great catch up, Bruce and traders. Really appreciate everyone's time, everyone's hard work that you put in there. I think, Bruce, it's been another afternoon where we've, us desk traders that sit at this all day long are sharing our ideas and hopefully giving some tips and advice. But also, I think there's that nuance of how John trades, how I trade. We trade the same, but we trade differently. And this chart, Bruce, is a great one where there's many trades on there. Some would take, some won't. It's finding your lane, finding what works for you that may not work for others. So, keep working that. Long weekend coming up, so happy holidays for those that celebrate. Happy Passover, happy Easter, and anything else, please. And look forward to catching up next week. Thank you very much. Take care.
Same to you. Thank you.
Thank you, everyone. Bye-bye.
Cheers, guys. Bye.